Yo, it's Friday. Stangam and John in the house. What's going on?
Dobbs. What's going on, Dobbs? Another day, another
Man,
continuation play.
what a day, man. What a night. What a night.
It was a kind of easy day. I mean, it was continuation. We had our little play into a report, and then we had our sell.
We had a report. Oh, that's right.
Yeah, there was a non-farms report
What
today.
did it do? Did it gyrate? What did it do?
Well, I mean, it does what it does. It shoots up and then it comes back down, and we sell the price after it comes down. So it
Imagine
did
that.
it did the same thing that they always do
So,
after the
so
reports.
how do we know that? How do we always know what it's going to do?
We use our London close range. London close range
Shut up, shut
all
up.
day. I mean, it did yesterday, it did today. London's close range was solid.
Shut
Solid.
up, man.
Let's start with the yearly again. I know nobody wants to see a yearly. It's crashing down. The sky is falling, Dobbs.
Oh, yeah.
The
Oh, yeah.
sky is falling. So let's look at this yearly. We're underneath the 200, right? I think 200 is at 39.50 or so. No, it's actually, yeah, 39.50, around 39.50. The 200 on the yearly is up there. I don't have it on the chart. I have stang line and moving average there, but we're underneath it. The sky is falling, and so is the market. Apparently, we had the bank that collapsed the market yesterday, caused a little panic, and realistically, all that
Oh,
scenario
man.
will create these moves.
You gotta love news.
Yeah, the
Gotta
new.
love it. I don't watch news, man.
You don't need to watch it. We don't care what it does on the yearly. We like to look at where it went, how it did, and what it could possibly
Chart gonna
do.
do what the chart gonna do.
Yeah, definitely. We really don't care about the yearly, but we still have the scenario of this still bouncing. They're gonna buy because we're literally at the lows. If you take these highs and these lows, this is 50%, but we're in the lows. Now remember, we could still go down and see these lows, and if it does, we're going with you. We could possibly go down here and see this low right here, which is previous month's lows right here. We're not going to this low, we're going here. And we got very close today, but look at that, a half back held. Remember, the market is always a buy on the way down somewhere. So you got to
Uh-huh.
be cautious on the lows. So as
Uh-huh.
this thing is coming down,
We do not sell lows at Stingham Trading.
nope,
No.
we do not sell lows. We wait for opportunities like today when they did the report and they couldn't get above 27. I think 27 was the key number, right? Today? Was it? Yeah, 27 was the key number. It was London's close range, the high side, and it was right at halfback of Asia range.
Mm.
So if you set up correctly, you have Asia range telling you that we can't go to 151 to the top side. We cannot hold halfback, but
Hmm.
we break below 151 to the low side. What does that indicate for us?
That's a breakout.
In the direction of where it's headed. And today the direction was down, down, just like yesterday when we could not hold 151 going into 1300 candle. It was a breakdown to the low side, and
Down,
all
down,
targets were
down.
hit. Today they're a little bit different at the end of the day. The range did get tighter, so we do probably need a little retracement. But we did also as well hit a halfback on the yearly right here. This is our last halfback on the way up. On the way up, we hit every halfback on the way down. So we
Yep.
are done with halfbacks on the way down.
We don't have any more halfbacks.
No halfbacks. The only halfback we have is this low, which is literally a yearly low. I mean, a monthly low. So if
Right.
we go down there, are we selling the lows?
No.
Possibly not. So we don't want to go too bananas at these lows
No.
because,
Cautious. Cautious.
yes, because the scenario could be that we are getting a bounce. A bounce. Now, the whole predicament of this whole thing, as we said that this price might go up, is the fact that contracts are rolling over. So the fact that contracts are rolling over, they are literally getting out of this contract and getting into a different one. The contract rollover will start on the completely. This contract will be done on the 22nd or 21st, 22nd of the month. ES for March will be the end of March will be not traded anymore, and it will just
Yeah.
stop.
we're going to go ahead and flip over Sunday night. We're going to go ahead. We have enough volume today
Yes,
that we can go ahead and flip over,
to the new contract, which is trading higher, by the way.
which is M as in Mary.
Yes, and that will
M.
be our next contract
ESM.
into the next 6 months.
3 months.
So is it three? Oh yeah,
Yeah,
May, right? They
three
get up.
months.
So those contract rollovers actually create
So
opportunity.
April, May, June. These will end in June.
Yes. And we haven't really dropped off that bad from this area. Now we could be looking at some that dropped off that looks like, oh my God, it's falling. But realistically, we're right back to where they're at. So at the same point, you're thinking that we dropped a lot. We didn't really drop that much.
Well,
We
see,
dropped.
I think we dropped quite a bit because we got January here. This contract just wiped out all those gains.
It sure did.
So
It's interesting because the yearly we just look at it just to see what they're doing. Because the possibility of the market tanking, it could be. We don't care. If it goes down here, it goes down here. If it goes up here, guess what we're doing? We're going up here with you. We're going both directions, only in the market. But
the chart's going to tell us which way to
the
go.
chart will definitely tell you. Now, days like certain days when we get to certain prices in certain areas, like today, you got to be cautious at the lows. It's a Friday.
And clock. Don't
Yeah.
forget the clock.
But like I said, when you set up correctly, you saw the plays, you saw everything happening as it unfolded. Um, like I said, this is just the yearly. We're gonna just keep an eye on it because now we're in the lower side of it, which literally doesn't really mean that it's a sell down here like that. I mean, if you're looking at here, what were they doing down here? They were buying. What are they doing up here? They're selling. So
Mm-hmm.
you got to take it as for where it is. Selling highs, buying lows, and
Mm-hmm.
that's literally like a bigger, like swing traders and
Yep.
long term traders how they trade. We really don't care. We trade the times that we're trading, like we always say, we trade the times that we're trading and the setup. We don't care if it goes up or down. We're trading both of them, which makes us very unique because at the time that you're trading, it could be a long. At the time that you're trading later on, it could be the opposite.
Mm-hmm.
We're not biased to where direction is headed, and we don't care about price, which is the best thing.
Yes.
Don't care about price. You know why? Because everybody else does.
That boggles
Everybody else,
everybody's mind when we say that.
yes. If everybody else is buying price,
We're trading time.
we're trading time and we're trading direction. So if this is trending downward, what we're trying to do, we're trying to sell the highs based off our setup, and we're gonna cover at our lows regardless.
See, that's the part that nobody on anywhere else. They tell you to buy low, sell high, but they
They
don't
don't
tell
know
you how
where
to
the
do it.
high is at. They
They
don't know
don't
where the
know.
high is at.
They don't know.
And say that, like the concept is there that if you stick with one thing, just stick with one thing. There's a lot of things that people put on their charts, and if the more things you put on there, the less efficient they are. Why? Because you were running through your mind thinking of all the things you have in your mind that will get you into a play. And guess what happens? That play leaves without you. So you have to literally set up, set up, set up. We say do the setup because the setup will keep you in line with what it is doing. If the setup isn't working, we're going the opposite direction. And that's fine. But what do we say? And what do we trade on? I trade on a higher time frame. So if it doesn't close above that price on a higher time frame, what is it possibly doing? They're possibly just selling above that. And then it goes in the opposite direction. Now you could wait for confirmation. And if you wait for confirmation, it'll show it. But we have targets and we have direction. And it's all in the chart. All you have to do is let it play out. There's things that'll tell you on a chart that says, oh, it's a long, it's a short. But realistically, there is nothing like the London close range. And I think I said in the chat today, I said London close is king. Why? Because it works. It works. Let's do just Asia range. If you just use that one thing, right? Asia range, right? This was a continuation sell-off. Nothing on this chart. Look, this is a 15-minute chart. If you use a moving average on it, nothing on this chart said buy. In fact, let's go into small details. Let's go from when it opened. Market opens here. Halfbacks, never above. Tailing halfbacks, never above. Here it comes back to the halfback, never above. Here is going into 9 p.m. Maybe you're not selling it. Maybe you're like, oh, it's going to turn around if it holds halfback, right? Trying to hold back halfback. What ends up happening? We fail halfback. Continuation.
Yep.
And even if you sold here at the highs, at the moving averages, have you ever got stopped out? Absolutely not. When do you get stopped out? Right here. This candle takes you out to play. Why? Bigger time frame and it closed above. Are you looking to sell here? No. What we teach is be careful going into midnight. This is midnight.
Yes.
So the play could be over going into midnight.
Usually it is.
Yeah.
That's the clock.
So if you're looking for this, it's not happening. If you set up
This was just luck right here.
and you had London's close range, right? Guess what we did here when we swept down and came back above? We held London's close range at the low going into midnight. So yes, you could have used that as a stop, and you would have got stopped out here than here, because I believe the price was it was like 80 something, 80 88 or something. I forgot what the price was. I don't have it set up. Anyway, if you set up, it would have showed you the price right there. Where London's close range was at. Let me see what
it was like 70 something, I thought. Like
78, right?
70 something.
You know what? We were messing around too much with the chart before we came on, and let's just do it real quick. I mean, it isn't really even hard to set up. So that's the hard part that we really don't. It really isn't that hard to set up. You take your price, we'll just do it on the fly. Boom, right here, it's really small. Let's do our lows right here. I'm not doing it as precise, I don't think, but yeah, boom. There it goes right there. So let's say, where are we at when time happens? We were near the highs. We failed our Asia range right here, which literally looks like halfback. But once we failed Asia's range, where are we going? Here. So yeah, if you had a target right down there, boom, you got hit. Now you could ride this down, but into midnight, look, after midnight, this candle takes you out. Which one's better, to have a stop right here or have a stop, let this go against you?
I think just get out at midnight. You got a better price.
Yeah, if you got out at midnight, you got a good price, and then you got the almost same price here. Even if you shorted here and went into here, you're still winning.
That right there normally don't happen. So that was a gimme.
Yeah, that was like by luck. But the play's there. At the same time, once we're holding what we're holding, we are holding the low of London close, right? We are holding the low of London close. Where can we possibly go? Boom. Now look, above Stingham line. Maybe wait until confirmation. We're closing on a higher time frame above Stingham line. Is there a long in here somewhere? Well, right here we held halfback. As you see, we didn't hold any halfbacks on the way down. But guess what we did?
Boom.
We held halfback.
Boom.
And then it does it again. Up, down, halfback right here, held. Even though we swept the lows, maybe you're not taking this price here because you're like, I don't know if it's gonna break, but boom, comes back up. You put a order right here. This is the big candle that broke to the top side, closed above. Let's see if it holds. Boom, it holds. Even if you held through this and you say, if it closed under here, I'm getting out. Just the same thing as you were selling it. If it closed above here, you're getting out. Does it close? If you took halfback of this candle, right, thinking that this was going to be a bias, 0475, right? What's the low of this? Like 5 points. Does it close below? Absolutely not. Do you get 5 or 10 points from here? You sure do.
Yep.
It's literally what you're risking is 5. You got close to 13 points right here.
It's worth it.
Yeah.
It's worth it.
And the scenario is we need to play in Asia's range. The fact that we broke down and never got back in Asia's range, you better believe we're getting in Asia range. Playing field. And what else do you have? This price right here. So say that you were buying this price and you're risking 5. Did you get your target? I mean, this is the part that I said that you got to get out before the report because of this right here, and that's why I say that they
This
took
one
it
candle
away.
took
They
out the whole range.
they know you're in right here. You see how they know where your stop will possibly be right there. Look how it comes and gets you. That's why we can't play the reports. Yes, they took it away from us, but before this report, right? If you were buying into this candle, right, you got at least 13 points up here. And even if it came down here before the report at 8:15 and you bought 14, you still were able to get out with 10 points right here.
Nice.
So 5 or
No,
10 points, you could have
no,
got 13.
you
You got
didn't
to get
need
up.
you didn't need the news.
Nah, you
No.
didn't need it. That's why I say that exit on this report before the report, because they're gonna go and possibly do a liquidity sweep, and that's what they did. They knew they had to go to the high side. They knew they had to get up here because we already held down here. So when it goes up there and rejects, what are we looking for? The report was here. What price is it at? What happens to it? It returns right back to it into New York Open. What do? We go right back down to where? If we reject it up here, guess where we're going? Back down here.
Right here.
They went right back to price. What happens after it goes to price? Oh, it returned back up there until London's
Oh,
closed. Guess what London closed
come
it?
back up here again.
And what London closed do? So if you set up
Hmm.
the way we teach you, London's closes up here, they got the same price. And then they said, we're selling too. Yeah. And then you're going into the end of the day, 1,300 candle.
Oh,
You're going into the end of the day, 1,300 candle, right? We're below. Am I
oh,
buying the half
high,
back?
low, half back.
So this low right here,
Sweet.
what does that become at 1 p.m. Eastern, 1,300 candle? What does it become? It became a high. So where we have to go? We got to go find the low. Look at the low as we found it into the close.
Hmm. It's
So
amazing. Magic.
the scenario that happens all the time.
Magic.
There is no rushing this.
No.
Now say that we got below this price at 1,300, right? And you're selling here. What are you using as a risk? You're using the moving average. You sell in this candle or this candle, right? And you're like at 79. What's this? A 10 points, right? Do you get 10 points? You get 30 points on the way down.
That's worth it.
This
Risk
is
10, get 30.
79, 79, that's 14 points. So yeah, you do risk some, but can you cover
Or
on the
you could
way down?
risk half back. You could just risk that.
Yeah, yeah. You could risk this high again, like right here. If it gets above this high, then you're out of it. If you're here. If this is coming down, you're still going through this.
Mm-hmm.
You're still moving to this to get to this target because it needs to find a low. What we have, the setup works perfect. The fact that this is still trending downward was happening. Now, above this price was the 200 moving average, like I said, 39.50. If we're not going up there right now, and London's close is not going up there, and we're below London's close, that means possibly that we're going to continue to move down until we find more buyers. And the scenario is it could have just continued down just like yesterday, and we could have had a move like this. But you have to work on your entries. You have to work on when you're getting in. If I move to a 3 minute, you have entries. This is a 15 minute. So let's go to I don't even
2 minutes. That'll work. 2 minutes.
I want to do whatever they use. So there we go. So let's do a 3 minute on this drop. Here goes your entry. This is that first half back fail, right? It failed, and then as you're selling this and you're going to a 3 minute, right? And you see this. Look what it did. What were we doing? You can see on a 3 minute if you set up correctly. Look, this is all you gotta do. We're playing within that box after we fill that box, right? Just the same way as they played to the top side with it, right? Right here, they bought it to the top side. London's close was up here. They held down here. Maybe you're long here. Maybe you're long here. Where you going? To the high side right here. And that's it, right? London's close at sell. They sold the highs like they always do. Once you get to this scenario, going into the 1 a.m., 1 p.m. candle, Eastern time, and you're failing below here, and we're underneath there, Sell here. Sell this. This is not telling you buy, even on a smaller time frame. What is it telling you? Continuation.
You're at half.
Ah, you
This
got
is
lower
high.
half of
This
that.
is low. This is half.
So say you start selling here, and we got this target down here. This is your. That is. This is literally your stop, and then trail it down. Trail it down. Trail it down. We're going all the way down. Where are we going? We're going right here. And until we get there, I'm not exiting. We have targets. Why? Because that's London's close range. That is 100% more realistically that's going to hit than this bounce right here. So if you're
That's
thinking, I'm going to buy here, that is not what's going to happen.
that's the play.
We have these prices, halfbacks of candles to see what it does there, not necessarily saying, I'm long here because we fell off so much. No, because the scenario is I'm selling and let's see what it does there. And what it do? It went like butter. Now, if you see a move that's looking to break or it breaks right here, then you're out. Yeah, small win, but you're still winning, right? You're out here. But the fact that this ain't even bounce up here, guess what? Let's go to target. You get out here. Why do you get out here? Because now you're going past the you're going past. Oh no, you still got to 1500. So say that 1500
Well,
was
that's the play, though. I mean, that's target.
right here.
That's target.
Yeah, the target's right here because that's London's close range.
Evidently, somebody else thought so too. Because look at the candles.
Yeah, the same thing when I was telling you pre-market, you didn't hear me say we're going 151. I said we're going a halfback. I think here into this report, I said we're going a halfback to test halfback. Why? Because if we reject halfback, we're going down, which is literally what it did. There's no guarantee we're going to the other side. There's no guarantee we're going up here. And I mean, if you did ride one contract to go to the high side, you got pretty close to not say, hey, let me cover this. You know, we're near the high. What do you expect over here?
You know, it started covering all them wicks.
Yeah, what do you expect over here? And it's doing this. It gave you a lot of time to say, this is might not hit. And then the scenario is, okay, let's just take the scenario. It hits and it goes above, right? Guess what? You're going to have another player go long.
Yeah, that's a breakout.
So just wait. And I say it all the time, wait for the next play. Why? Because the next play will be in New York. And if we're above here, we're breaking out where? To the top side. And we got targets to the top side. But that scenario was not there.
Mm-mm.
The move was still continuation. We said last night on the recap, we said we're probably going to continue more to the downside because of the way it's sold off and news is sold off on. They do not want to recover from something as severe as something as financial as a bank. Now, is it going to be old news next week? Absolutely. You know why? Because they'll sweep it under the rug and it'll be old news, and then the market will possibly.
We'll have some new news.
Yeah, they'll possibly have some new news, and we'll be up like this and say,
hey, guess what the new news is? New contract. We have a new contract.
Yep.
Yep, that's the news.
And a week from now, they're saying, hey, we found our bottom for the year, and they'll be back to buying again. They don't care. Price does not matter where it's at. It doesn't. It's just the chart. It reflects something, but we trade what it's doing. And that's the thing. They want to throw you off sides thinking that any of this price matters. And realistically, when it goes down to those lows and then bounces back up, everybody's like, oh, well, the bottom is in. That's just an excuse to say that they were wrong about where price was at. We don't care where price is at. We're going to trade it for what it does, when it does. Whatever games they want to play with it, we're going to play with them.
And we can see the games.
Yeah. So you play the game that they lay out in front of you. You don't predict where price is going. You don't become biased of what it's.
And that's the great thing about the setup. It plainly shows you there's no bias. If it's here, it goes there. If it's there, it goes over here.
Absolutely.
It shows us the way. Setup.
Absolutely.
Good week.
Yeah. I mean,
it was a good week.
The only thing that was bad was probably the Fed week. The Fed's talking. That was just bad.
Yeah.
All they did was slow it down.
Good week. I haven't heard of anybody else getting funded this week. I'm sure there's somebody that did.
I mean, most people should be funded. We got to get some of the people that are struggling to get funded, but I'm sure we're going to do enough to get everybody funded. And once we get people funded and they're to the level that they want to be at, they're gonna slowly build, and that's what it is. It's no race.
No, this ain't no get rich quick.
This has not changed at all. We haven't
Mm-mm.
changed anything. There hasn't been any changes in what we do.
Nope.
We literally do the same setup every day, and it does exactly what we expect the market to do. Now, is there curveballs that are thrown once in a while? Yes.
Yep. Yep.
Understand the reports, what they are doing with the reports. They're doing a fake out, a fake breakout to go the opposite direction.
Mm-hmm.
So when you're thinking that, oh yeah, the report is good, it's bad, right? They sell into it, and guess what they're doing afterward? They're buying it to get back up there. We're still due to return to the highs, which I keep saying like we're going all the way back up, um, because they have to fix the structure of the market. Even when they sold off yesterday from the bank news, like I said, once they sweep that under the carpet and everything's all dandy in the financials, it's gonna go back up there. It's
Mm-hmm.
just a matter of time that it does.
And look what they displayed today. The old W pattern,
Yeah,
higher low.
it's starting to make a recovery of it.
I
And
mean, we don't trade patterns. I don't trade patterns, but I just thought that was interesting. We had a nice W here.
so when they develop these patterns, it's because they actually want people to get in them. And if you see the pattern, you're saying, well, they're gonna make the market move. Now, how we set up, we don't really care about that because
Nah,
we wait for time to get into play. So if a play happens and you missed it, what do I always say?
wait
Wait.
for the next clock.
There you go.
Wait for the next clock. There's no rush.
Yeah, because it could go in the opposite direction of what it went. Remember, when it gets out of place,
Or it could give you the same play again, same
yeah,
entry. If you
exactly.
missed it, it might come back and pick you up.
Yep. The worst thing is to get in it before the clock, and then it literally gets
Pulls
you a
back
better,
on you.
yeah, it
Yeah.
gets you a better price, or it goes in the opposite direction. And you're like, wait a minute,
Mm-hmm.
these guys aren't buying, they're selling. So if you wait on clock, you be safer. You're not gonna miss any plays. The problem is that people jump into these plays after the fact, thinking that they're gonna continue in it before it's even time to start. And that's where they get people that they move, they make these exaggerated moves, and then they go back, so they pull back enough so you could actually get in it, because the prices that we
Think
have.
about it. Yeah, think about it. If the average rotation is 10 points for ES, we're talking ES, it can pull back 5 points. So if you see a rotation that's already hitting 10 to 12
20.
points, you should be expecting a pullback, at
Yeah.
least 5 points.
Now there's days that like the big sell-off days, and those days we haven't had those days to the top side where it just keeps going. We have had the days to the downside, but only when there's news. So even when the Fed started talking, that was a big drop. But realistically, when you waited for time for London's close, it gave you the play. Now, to yesterday with the bank news was a different play, because that accelerated the market to the downside. The overall market, the financials were coming down, and they took advantage of that to sell.
Yep.
In something like that, they're gonna go fix
I
themselves.
think we had what I tell you, 97-point drop today.
Yeah,
I
we
think
had a
was the
big drop.
range.
It doesn't even look like much, but it was a big drop.
It was a drop from here
So,
to
so
here.
let's take the scenario of this when we drop from this news, right, from yesterday, right? Look what we're looking at right now. What are they doing at these lows?
They're done buying because think about it.
They're buying it.
We're here. We're
Yeah,
above half back.
yeah. So let's take this low, this high. Look what it's doing. So the scenario, that's why I said, oh, it's got a hold down here today at the close. I said, yo, it's got a hold down here.
Or they might come here and then go here.
In fact, this is after hours right here.
Mm-hmm.
This is crazy. This is literally after hours.
Mm-hmm.
I didn't even see it after hours, but in my mind, I knew it was going to go back because of how this range was right here.
Mm-hmm.
Because of the you got to think in the scenario. London's closes here, right? This is 1300 candle right here. Wait. London's closes. Why am I looking at this wrong?
No, London closes over
I'm
here
on a, I'm
somewhere.
sorry, I'm on a 3 minute. That's bananas. I was looking at 3 minute dollars. Why don't you tell me something? Let's look at the big drop. I apologize for that. It looked like legit too. That's the thing about small time frames, right there. So let's look at this drop from up here, right, to down here. No halfback tested at all, right?
Nope.
Now let's take this high to this low, and look at London's close range up here. London closed up here, right? So let's do that scenario. So we get above here, and we get in this area, and we break that high. We're definitely going to.
Mm-hmm.
I mean, we get up here, and we do want to ease. This probably possibly what we're looking at. Remember, London could get up here, and we're getting back to London's close. London could sell it here. We go back here into New York, and we move up that way because that'll be high, low, halfback, right? We break that halfback. We get up here into London's open. They might sell it into New York. New York might buy the low, and then we're looking at this move this way to go back to fix ourselves.
Mm-hmm.
And that could be a scenario. Now, once we get up there, guess what we're above? Remember, this is this is a this is literally going to be crucial right here at this price because of the 200 moving average. And it's probably going to do this. We're probably going to be here. I think Tuesday or Wednesday, we'll probably be into this price right here. And the reason I say that is because we never tested the 200 and CPI data is next week and Tuesday or Wednesday, I think it is. And that's going to cause, that's going to be right here. That's literally what we're probably going to look at. So if it's not this day, it's going to be that London takes it up here, maybe possibly hit the 200 and we come back down. And then the next day we're back up here. But this 200 will be tested into CPI data because if an overall market wants to really sell off, it's going to go up there and reject that 200 from below. And once it rejects that 200 from below, we'll have an answer of if we're going to go sweep the lows. And the lows that we could possibly sweep on the yearly, which we really don't care. But the possible sweep of the lows is to take out these lows right here. Once we take out those lows, then we're looking at this big candle that we talked about going into January. This candle right here is crucial. It's the candle that created the breakout right there. Let me get rid of some of these lines and then you see it.
Right now,
we're below. So, and we're a halfback right here.
Mm-hmm.
So the fact that if we hit that 200 and fail that 200, guess where we're going? If we fail this halfback, then our destination for this is literally these lows. We're probably going to hit this low first and bounce and probably reject that halfback from below and then come to this low. But that's an overall market situation where I don't think it's going to happen because I think the Feds will step in and buy this market up. Like I said, that situation is more likely going to happen into October. We'll probably do some move like this still. I'm not sure if we'll go any higher than these highs, but I'm sure they'll make it happen. If people get very, it's about making money. If options get very heavy on the put side, they'll run it up as high as they can, and then we'll have into October when the contract rolls over again and 6 months are done, we'll have that move down this one, and that'll be the sell to that, and possibly we'll by the end of the year,
3 months.
Yeah, be sweeping this low. May is the next contract, but I think we make our move down. Let's say that we make our move down, we sweep this low. I think
June's the end of the next contract.
When is it?
June.
All right, so June we'll come back. We'll possibly come back and take out this low, right?
April, May, June on the new contract coming.
And we'll probably do this into October right here. This will be, if June is here and we're at the lows into June, right? we'll probably do this bounce from here, hit this area, and fail into October. So August and September is usually the worst months. August leading into September is usually the worst months in the market. You know what the other months are? March. And we are right now in March. And
the end of March. Yep.
Half of March. So if we're going half of March and we're really not selling off that much and we're at the lows of right now, what it is right now, they could possibly make this go up. But we don't care. At the end of the day, we don't care.
Nope.
It's good to see it because we got an understanding of what they're doing. And when it works out, we're like, oh, they're literally doing what we talked about. Maybe we shouldn't be so forcing plays down here, and we should be more mindful that they're buying and they could have a big buyout. Just like this candle right here and this candle right here. These candles right here were extreme buy-ups. Can we see it again? Of course we can. Remember, we sold off on news, and news is just a way for them to take money from the market. When they sell off on news, what do we usually do? We return back to price. So all they do is just buy more time. Now, do they want to catch people off guard? Yes, this could be a catch off guard and then flip it around. So you never know what they're doing. But if we don't care about that, because the way we set up, we play for what it's doing at the times that it's doing. We take our plays based off of that. We don't care what it's doing on the yearly. We don't care where price is at. We don't care resistance, support. We don't have any of that.
Don't believe support and resistance.
Nope. We just go with what is doing at the time.
Ain't no such.
Closes if it closed above 27 today on a higher time frame, and we held that halfback, and we go above 151, we'll be going the opposite direction. And guess what? We will be doing. We will be waiting until on this close to buy it some more or sell it back down.
Mm-hmm.
And then after that, we're going to look at 1300 candles. If they keep on going with the flow, guess what we're doing? We're going with the flow. It's the same scenario that we were doing at these highs before they sold off. We took it to targets and then it sells off. Okay, cool. That's good. I don't care. Guess what I got? My 5 to 10 points. And that's all you have to do in your mind. Be like, well, I got my play because I waited for it. You don't know when they're going to sell it. You don't know when they're going to buy it. Extremes. You go with what it's doing and then you base it off of that. If it's selling and it's selling exaggerated and you're seeing that, oh, well, it's selling off, I'm going to go with that flow. Yes. But we have things that tell us that if we're failing like a London close high or low, we're going to the next one and you continue trending until it changes. But like I said, we wait for time, we wait for our proper entries, and we don't chase anything.
Nope.
Not buying the highs, we're not selling the lows.
Nope.
We're literally taking play from high to low, low to high.
And we might leave a runner, but we're not chasing.
And there was chances for a couple runners, but really those runners are only once in a while. So
yes.
They do happen. But realistically, when you see the market big candle come down like off of news or some kind of meeting that's happening, there's no indication that that's going to continue until there's another play developed.
And here's the thing on these funded accounts, you got to take profit. So you have to be careful with the runners with that trailing drawdown because it will get you. So to be honest, you're just better off just taking your targets.
There's some days that you could get killing. There's days you get kills, and there's days that you're like, okay, like
a runner with a tight stop.
Yeah, if you could produce $400 to $700 a day on the regular, you're okay with that. You don't. Most people don't make that at work.
Nope.
So and if you get that, if you become that, you get that runner once in a while, and you're like, wow, I just made 1,800. I'm good.
Yeah,
that's a good day, but don't expect that every time. Depending on the risk and what you're trading, because some people could get up to that and be very good with that, and that could be their daily plays because their risk is what they weigh it on. But realistically, $700 a day is good money. It's literally $3,500 a week, which adds up to a ridiculous amount for a month. 12,000. That's over 40. It's over 144,000 a year.
That's enough for anybody to quit their day job.
Yeah, and that's literally where you can move towards. That's the goal for everybody.
Yes.
But before you get there, get to $100 a day. $100 a day. You could do it with this. You could do it with the setup.
Yep. You only need $50 a day times 20 accounts. That gives you 20,000 a month.
But you have to start somewhere. So get $100 a day with one account, and then work your way to get to 5 accounts, and that's 500. Then make your way to 10 accounts, and that's
But you only need $50 times 20 accounts.
Yeah, and you
make 20,000 a month.
There is no rush in it.
That's crazy. Think about it. If we can't make $50,
what are we doing?
What are we doing?
That means that this doesn't work, and that's proven to be wrong. We have a ton of members that can prove that wrong.
$50 is all you need. Yeah. Well, with that being said, we know we got the risk disclosures. Can you see the screen?
Yes, sir.
You're going to lose your butt because trading's risky.
Trading is super risky.
Super risky. The risk of loss of trading securities, options, futures, forex, and commodities can be substantial and are not suitable for all investors. You must consider all relevant risk factors, including your own personal financial situation before trading. In other words, don't trade any money that you cannot afford to lose because you assume the risk of any and all financial investments you make on your own. That is why we do not tell you where to buy and when to sell.
So anyone that asks us that, we say, I can't tell you.
We can show you the setup, the chart. We can show you some indicators.
And tell you where there's entries after the fact, but we cannot tell you.
The play is on you.
Yes.
Cause so many time passed by. Don't know why I'm losing my mind. Ego was so strong inside. At this point I just lived a lie. I just lived a lie. I wish I could tell you why. I wish I could feel you again, but I know it's too late, and I know you're away. There's no chance to apologize, nah, nah, nah. It's a goodbye, just a goodbye. Forever and ever, you'll never come back. Just a goodbye, forever goodbye. I sit in my ride, think about you. Drive through the night, I got nothing to lose. Strobe city lights, they can tell me the truth. Tell me what I should do, I got nothing to lose. I got nothing to lose, thinking about you. Drive through the night, I got nothing to lose. Strobe city lights, they can tell me the truth. Tell me what I should do, I got nothing to lose. I sit in my ride. So many time passed by. I saw you last time. This is my last ride. I wish we're gonna see us on the other side.